Good day, everybody. You're welcome to Blue Peeps Trading and Capital. You're welcome to another episode or to another edition of our lectures of our training. So today we shall be teaching what synthetic indices are. What is synthetic indices? So firstly, we talk about what is synthetic indices. Then we talk about types of synthetic indices. We talk about advantages of synthetic indices. Then we talk on how to trade synthetic indices. So those are basically what we'll be talking about today. So we'll be very fast and rush it. So without further ado, let's get into it. Firstly, what is synthetic indices? Synthetic indices are markets that are simulated, with an emphasis on simulated. So simulation is the imitation of a situation or process. So simulation is the imitation of a situation or process. They behave like real monetary markets. However, their behavior is created from the use of randomly generated numbers. So that is basically what synthetic indices are, which in simple terms, in lay terms, mean synthetic indices are just a lookalike of a real market. They are not a real market, but they are just a lookalike of a real market. That's basically what synthetic indices is, or what synthetic indices are. And then we go on to the next one, the types of synthetic indices. So there are two basic types of synthetic indices. The first one is the volatility indices. So what is the volatility indices? The volatility index is a contrarian sentiment indicator that helps to determine when there is too much optimism or fear in the market. When sentiment reaches one extreme or the other, the market typically reverses course. So what this is just trying to say is that it's just trying to tell us that the volatility indices is just an instrument, an indicator that is used to measure if there is enough optimism or fear or whatever it is that happens in the market. So it just tells us basically what mostly happens in the markets. That is basically what the volatility indices are. And we have a lot different types of volatility indices. We have the volatility 10, volatility 25, volatility 75, volatility 50, volatility 100, volatility 10 1s, volatility 25 1s, and so on and so forth. We have enough of them like that. Then the next type of synthetic indices are the crash and boom indices. The crash and boom indices are synthetic indices which are markets that tick based on simulation from stocks. Crash 500 index, on average, price drops in the price series every 500 ticks. Crash 1000 index, on average, price drops in the price series every 1000 ticks, and vice versa for boom 500 index and boom 1000 index. So basically, also the boom 500 index, which just means on average price spikes in the price series every 500 ticks, and for the boom 1000 index, on average price booms or price spikes in the price series every 1000 ticks. So this is a graphical representation of the boom and crash index. This is just basically graphical representation of the boom and crash index. Then we talk about the advantages of synthetic indices. There are advantages of synthetic indices. So the first advantage is the synthetic indices markets is a 24/7 market, which means it doesn't close, it is not affected by public holiday, it's not affected by anything whatsoever. It works 24/7. Doesn't close on weekend or night or day or any public holiday. It's always working. Then the synthetic indices is not affected by any fundamentals, which means it is not affected by news or any economic events, which means synthetic indices works without being affected by news or any economic event. So if the price of gold is going up, going down, it doesn't affect it. If anything is happening in the world, it doesn't affect the synthetic indices, unlike the normal currencies where world events can affect the price of each currencies. But compared to synthetic indices, they are not affected by news or any economic event. Then the synthetic indices market is solely based on technical analysis. It is solely based on technical analysis. The synthetic indices market is solely based on technical analysis. The synthetic indices market is solely based on technical analysis. So you just need a technical knowledge, a technical analysis knowledge to trade synthetic indices perfectly. That is basically what it's trying to tell us over there. And then talk about how to trade synthetic indices or where you can trade them. Synthetic indices are traded mainly on the MT5 trading platform or options on deriv website. At Blue Pips Trading and Capital, we basically focused on trading synthetic indices on MT5 trading platform, not on the options or deriv website. So to open a synthetic indices account, you need to first open an account with deriv.com. Why do we need deriv? Yes, we need deriv because for now deriv is the main broker that trades synthetic indices or that offers synthetic indices as an instrument of trading. So that is why we need a deriv account to trade synthetic indices. That is why we need the deriv account to trade synthetic indices. So down in the description below, I've dropped the link to open a deriv account. Down in the description below, you can check it. You'll see a link to open a deriv account so you can start trading synthetic indices. And finally, you can contact us, Blue Pips Trading and Capital. Here is our Telegram link, the link to our Telegram channel. Here is the link or how you can join, and also it is also down in the description below. You can see it and join us, and we teach you how to trade, and we also give daily signals. We give signals on how to trade synthetic indices. We give daily signals on trading synthetic indices, which we can say they are perfectly 70% to 80% perfect. So that is that on it. So first, I would like us to subscribe to our YouTube channel, like the video, share the video, thumbs up, and also turn on your notification to get notified of any new video we drop, because we shall be dropping more videos with time. We're dropping more videos because these are free contents. And also please do join our Telegram channel. It's very important so you can get the signals on trading synthetic indices. So we also give signals on also forex. So we give the signals and everything. So thank you and God bless you.